Welcome. If you're a brand new real estate investor, today I'm going to share with you the top 5 tips that will help you get cranking. In fact, I've got Devin coming in studio today, and I'm going to break it all down for him and help him understand as a brand new investor the 5 most important things he needs to know. Most importantly, not to make sure he makes $1 million, to make sure he doesn't screw it up. These 5 things are probably the most important things I would share with any brand new student from someone who's done thousands of deals. Check it out.
What we're doing here ain't just scary. It's about to be legendary.
All right, welcome back. I am joined today by Devin. How you doing, brother?
Doing good. How you doing, Kris?
Awesome. Now, Devin is a brand new investor, so I wanted to share these tips with him because he's been blowing me up. He's been asking some fantastic questions. In fact, he's taking action, but you're also still at the stage where, how much real estate do you own?
I currently do not own any real estate.
Okay, so he's at that big fat number of 0 where we all start, right? We're all created equal in this game. Most of us starting with no money, no nothing, and then figuring out how to really get rocking and rolling. So, dude, I was there, and the most important thing you can do right now is get the right tips, information, and help and mentorship so that it can lead to your first several deals. Because right now you have a plan, right?
Yeah.
But you have a lot of questions.
A lot.
Awesome. So we're going to, what I'm going to do is I'm going to put some of these things up here on the board, and what I want to do with some of the questions you've been asking and many of the questions you've been asking, if you're a beginner investor, there is some basic information that if you do not know, it could likely kill your ability to actually successfully get in the game. So I've got 4 tips specifically today that I think are really going to make a big difference. First of all, just tell us briefly a little bit about yourself. Where do you live?
Right now I'm living in Salt Lake City.
Okay, and like what's going on in your world with this whole real estate thing?
Honestly, I'm just looking around trying to find a good deal. I got a little bit of money saved up.
Currently renting?
Currently renting. I'm living in an apartment with my wife right there in downtown. And we're just looking to make something happen.
Okay, awesome. Many of you watching that might be thinking, hey, like if you don't own any real estate, that probably sounds somewhat familiar to you. Yeah. That's how it sounded for me, Devin, when I got started on my journey of real estate. So I had to pay a lot of time and money for mentors to help me get some of the basic information and tips that made a world of a difference for me. I'm going to share them with you right now.
Perfect.
Okay, so if you're a beginner in the world of real estate, I'm going to write these up here. The first thing that I would focus on if I were you, single family homes. That's always abbreviated SFH. And the reason why I recommend a single family home is because commercial, multifamily, other stuff, they just require a lot more money. And so often, if you're starting with very few means, which most people are, real estate can often demand a 20% down payment. So, you know, a $300,000 house, I put 20% down, and you know, now I'm parting with $60,000, $70,000, $80,000. That's a lot of money for a lot of people. There's got to be a faster way. And so single family, entry level, and this one's really important, Devin, purchasing this home, guys, below the median. The median means the average home price in an area. And the reason why I care so much about that is because I want to cater to the largest population of people in the game of real estate. And the median, if I'm below the median, this is what the bell curve looks like. If I were to actually draw this on the screen for you. With this bell curve, if this is the median right here, this is the average that people will spend on a house. Over here, I might have mansions, like $1 million homes. That's at the tail end. There's very few people that can get that. But over here, this meaty section, this is actually right here. This is where you've got your greatest safety protection. The most people are looking for homes, so they're the easiest to rent and they're the most affordable. So affordability, ease of rent, most people looking for them. I recommend everyone start there as like the beginner move. Does that make sense?
Yeah.
Any questions on any of that?
I guess where do I look to find a home that is below the median?
Yeah,
right?
So super important, right? Like you don't want to get caught in some slum, wrong side of the train tracks, getting like a really crappy kind of house. Because some people think, oh, that must mean that I'm going to become a slumlord and buy really crappy real estate for people. That's actually not true. You're actually looking for the nicest neighborhoods that are priced below the median. You're looking for the most desirable areas that people want to be, where families want to be, at least when you're doing like a short-term buy and hold, which is really the second thing I want to share with you. I don't recommend when you're brand new flipping real estate. If you do a buy and hold, What that really means is I'm going to get a piece of real estate, I'm going to put a family in it, I'm going to rent it out, and then I'm going to try to make a positive cash flow, right? Like I rent it for $1,500 a month, but my mortgage is $1,200 a month. There's $300 left over that you get to pocket for owning that real estate. As far as where you find those homes, I think it's important when you're doing backyard real estate to get familiar with where you live. Literally take a couple hours and drive around neighborhoods and start asking, you'll see billboards and price tags and homes for sale, and you'll start quickly figuring out, hey, in my area, the median is $240,000. So I'm looking for homes in the 170, 180, 200 range, so I'm below the median. And where are the nicest and newest neighborhoods that look like that?
Yeah.
That's where I would be looking. Does that make sense?
Yeah, it makes a lot more sense.
The third piece of advice that I want you and to all hear is that you've got to be looking for a good ROI. Owning real estate is not the goal. In fact, we're not even interested in real estate investment. We should always be most concerned with what is a really great ROI that produces a service for people. That's where we're going to win. And if you're a beginner, I think that ROI sounds like math, right? It sounds
that's exactly
like,
what's in my head.
right? It's like, okay, going back to school,
Yeah.
5th grade was a long time ago. Fortunately, you don't need calculus. You don't need geometry. You need like some basic math. Guys, you can do this. This math is simple. There's 3 numbers that you need to care about when calculating an ROI, which stands for?
Return on investment.
Good, you're doing pretty well if you can answer
Gotcha.
that one. ROI, return on investment, it's the equalizer of all investments. It's what tells me apples and oranges. How can I compare everything to each other? ROI. There's 3 things that you should be concerned with your ROI. The first one is what's called a cash on cash ROI. That means if I put money in, then how much each year am I getting back? Like, to show you simple math, let's just say that I put in $10,000, and so this is what went out, but $2,000 that year is what came back. Well, $2,000 is 20% of $10,000. So this would be an example of a 20% cash on cash. Now that's a fictitious example to give you like an understanding. Yeah. In real estate, a really, really good cash on cash is going to range between 6 and 10%, okay? But that's how you do that math. It's actually not hard. I put money out. How much of my money I'm putting out am I coming back? Now, if you guys are putting money in the stock market or 401ks or IRAs, you're probably scratching your heads like, money's supposed to come back? That's because most people put their money in places that it doesn't come back. Yeah. Listen, it's speculative if you put it out and it doesn't come back. It's a real investment if I put it out and it comes back. Most people aren't real investors. They are just doing what everyone else is doing. So part of your ROI is understanding what is the cash on cash component. The second part of calculating your ROI is just understanding what is the appreciation in my market. From 1963 to present, the average ROI in all of America has been 4.58%. So it's like, imagine if your bank account was earning 4.5%. What does your bank pay you right now in returns?
Nothing.
They don't even give you anything? It's a safe place, right? Maybe they give you 1/10%?
Maybe.
Maybe not. I don't know, right? Like, we don't put our money in banks because we're growing it.
Yeah.
But imagine a bank that did this. Well, a home is a bank account of bricks that grows at the rate of appreciation. If the national average is 4.5%, then if I'm doing 6 to 7% on my cash on cash, I'm doing 4.5% on my appreciation. I add those two together, now it's like, wait a second. If I'm earning 6% cash on cash and let's say 4% appreciation, 6 plus 4 is?
It's 10.
Okay, now I'm earning 10%. But that's not true, you're actually earning more than that. The third thing that you want to be aware of is what I call principal reduction. Now, don't get scared by the phrase. It means that when I have a mortgage and I pay my mortgage, a part of that is going to interest in the beginning, most of it. Yeah. But roughly 5% of that is going to come back to me in the future as paying down my principal. When I sell the house, I'm going to get that money back. Or when I refinance, I'm going to get that money back. So if principal reduction is also 5%, in our previous example, if I had a 6% cash on cash, a 4% appreciation, that puts me at 10. But now add 5% of principal reduction, and what am I at?
You're 15.
10 and 5, 15. A 15% ROI, is that bigger than the average 401k return?
Absolutely.
Many times.
Yeah.
Is it bigger than the S&P 500 on the stock exchange? Hugely bigger, right? This is why people get in the game of real estate. So this next tip that I want you to understand is just can I calculate my ROI? Now the way I'm breaking it down, let me ask you, could you look at a deal and actually start thinking through the ROI?
Now, if I sat down and really thought through it, yeah, I could start picking it apart.
Because here's what you'd think. I'm gonna buy this house, how much money am I putting out? And I know what my mortgage will be because the loan officer told me. I know what my cash flow I'm guessing is gonna be. I can now guess how much money will come back. I can calculate the cash on cash. Then you can say, well, I can Google the appreciation for this area, and I can also Google the principal reduction, and basically you can actually figure out an ROI. Does that make sense?
Yeah, it makes a lot more sense.
By the way, dude, I'm telling you right now, if you can calculate a simple ROI, you are already significantly more savvy than 95% of real estate investors out there. Is that cool?
That's awesome.
Dude, good for you. Awesome. You guys understand that. I got a couple more things I want to share with you. The fourth piece of advice that I want to share with you is that you need to compare when you buy a home and you're going to hold it, you're going to have this ideal concept of what your cash flow is going to be. And brand new investors tend to be overly optimistic. That means they guess high on stuff. That can hurt you. You want to be a realist. I'm an optimist in every part of my life, except for the numbers of business. Then I'm a realist and sometimes even a pessimist. I want to know truth. I want to know reality. So a lot of people come up with a cash flow, but here's what they don't really factor in. They don't factor in the condition of the home. And you might on paper say, I can rent this for $1,400 a month. Guess what? In that part of town, everything else is being fixed up with nicer carpet and paint. If you don't carpet and paint and put $6,000 in there, you're not going to be able to demand that rent. You might get $200 or $300 less a month, plus waste months of having a mortgage unpaid trying to get them. So I want you to also understand that the condition of a home doesn't necessarily drive the value of the home up, it drives the perceived value. And what we're really controlling in controlling real estate is controlling people's perception, which means you shouldn't have the nicest house and you shouldn't have the ugliest house. Your house should be fixed up to what everything in the area is fixed up at. So by the way, when the market struggles, people might be putting in granite. When the market's hot, they might be fine with Formica. Those are countertops, by the way. One's cheap, one's expensive. And you're not trying to be better than anyone. You're literally just trying to be at market so you can get what the market is giving. If you put in too much money, you won't recuperate that. If you put in too little money, you won't get your house rented.
Okay, so make the home average, but use your brain to make it as profitable as possible.
You totally understand.
Got it.
Dude,
Okay.
so you're totally
Got
getting
it.
it.
Yeah.
Dude, today I want to give you a bonus. Can I do that?
Yes, absolutely.
I got a
Please
gift
do.
for you, and for you, I've got a gift as well. I want to give you my fifth and final tip today, which is how do you get the most money? Like, would you like to know how to make the most?
Absolutely.
Don't be a landlord and do a rental, because you're either going to lose some money to the property manager because you don't want to do it, or you try to do it and you fail at it. When you're a beginner, it is so easy to screw up getting the wrong tenant and then being relaxed and lenient when you need to be stiff as a board. So what I want to recommend here is a strategy I use for beginners. I think every beginner should engage in this, and it's called a lease option. My book here, have you read this?
Yes, I have.
Okay, so you know about the compassionate financing game, right?
Yes, genius.
This game is all about how do I get maximum rent, but also put maximum control in the hands of the tenant so that they want to take care of the home and fix it up and do all of that. It produces a significant ROI, but more importantly, it gives a family an opportunity at ownership when a bank might not. So I love the compassionate component of that. For all of you watching today, this book is free. I've written several books, but this one's really about do-it-yourself. How do you become your own self-made man, self-made woman, self-made millionaire? If you click the link below, you can get your hands on this book, and it'll take you through the details of what a lease option is and how you take advantage of that to really make it work for you. By the way, you've read the book. Have you watched my lease option series on the YouTube channel?
Yes, I have.
Okay, for those of you, by the way, was that helpful?
Yes.
Did it really give you the ins and the outs?
Open my mind up.
Yeah, listen, if they haven't watched it yet, would you recommend it?
Yes, please watch it. If you want some of this real estate, get into this.
Guys, listen to Devin, get yourself a copy of the book, but video coming up next here, I create a little mini series that will actually show you exactly how to make the most money doing a lease option versus flipping versus renting. I will prove by math, simple math, how you can make the most money in the game of real estate. And Devin recommends it?
Yes.
Devin, should they subscribe?
Subscribe, like, put your information in, get in touch with Kris's team. It changed my life, it will change yours.
Awesome, thank you so much. Devin, thanks for being here
Yeah,
today.
thank you, Kris. Appreciate
And for you guys, you've got some free tools. I hope you enjoyed today's tips on how you can be a brand new investor and go out and crush it.